Breaking economy news: since the stock and bond markets are incapable of putting a realistic value on the economy, its outlook, and prospects for more growth, we turn back to the economic data this morning. What do the monthly retail sales numbers say about the future? Well, the economy is on track early in the first quarter if these data are to be believed. These are January data, with those rocky financial markets, snowstorms, and the Fed wondering if the risks are still balanced with the U.S. economy facing the headwinds from global economic and financial developments, as they politely say. Well, the bond and stock markets seem to think the retail sales are strong data this morning, and that's all that counts lately. Retail sales rose 0.2% in January, and the December data were revised higher to a gain of 0.2% from minus 0.1% in the estimate made a month ago. We know it doesn't sound like much, but retail sales are running 1.6% in the first quarter of 2016 with this report today, which counts as a strong start to the year and backs up our forecast for real GDP, even if the report does not get released until, wait for it, April 28th. That's a Thursday. We're looking for 2.5% real GDP. Retail sales were only up 1% in the fourth quarter last year, and now with just 1 month into the first quarter of 2016, sales are up 1.6%. And by the way, don't go overboard with the consumer weakness story in the fourth quarter, as that 1% retail sales does not include spending on services. What did they spend in January? Well, we saw some increased expenditures of consumer dollars on electronics, building materials, food and beverages, clothing, internet sales, a good mix of goods. Net, it was anything but smooth sailing for financial markets in January, but the consumer is taking all the news in stride, saying, what recession? Life goes on. Let Wall Street panic. Main Street America seems to be okay. Confidence readings are high, and it shows. Retail spending on everything other than gasoline, remember prices at the pump are in free fall, looks pretty good, rising 0.5% in November, 0.2% in December, and 0.4% today's data in January. The decline in gasoline prices is distorting the total retail sales figures right now. If the stock market wants to forecast another of those 9 of the last 5 recessions, our advice is to say, let it. The consumer continues to spend, and if the trend continues, the Fed may just well have to put a March rate hike back on the table. Stay tuned. Story developing.